So, Devin, have we been missing something? Has Morgan Stanley been creeping up on its peers, sort of unbeknownst to the financial community, or was this all because of Steinhoff?
I think we'd take a step back here, and thanks for having me on, Vonnie, by the way. Good to see you. They've had a great kind of move over the last several years. So this isn't just one quarter coming together. This is, just hitting targets year after year. 2017, the backdrop probably couldn't have been much better, where you have the S&P 500 up 19%. You have 3 interest rate hikes, and that's very powerful for their business. But then they're also executing, from a business perspective on, getting margins higher, taking out expenses. And so it's interesting, after such a good move last year, we're now heading into 2018 at even better positioning. And so the company just had their earnings call. They gave their strategic update, and they're moving their return on equity targets higher to north of 10%, 10 to 13%. So I think that's a kind of a big inflection point in this company's history. And so I don't think this really snuck up on us. It's just been execution quarter after quarter, year after year. And now we're in a good spot right now.
Is it too much to say that James Gorman is performing better than the likes of Jamie Dimon or Lloyd Blankfein?
It's a little bit of a different business model, obviously, but I think what we are seeing right now for Morgan Stanley is the power of their diversification and really the strategic decision they made to really push forward in wealth management. Now that business is over 40% of earnings. That should only increase from here. And so you're seeing the diversification benefits. This is a quarter where we knew the fixed income trading backdrop was going to be difficult, and they still end up having a good result because wealth management is a much bigger driver today. And so I do think that they are executing, and it's a little bit of that strategic push towards wealth management.
What can we take away from the fixed income side, Devin, and what's the outlook for the investment bank for the rest of the year?
Fixed income's obviously been a difficult business here for Morgan Stanley, and I think the rest of the industry, this quarter, but over the course of this year, you just didn't have volatility. You didn't have some of the things that can really push that business. And so we don't see a big change in the operating backdrop for fixed income. The good news is, for Morgan Stanley and the industry, I think this is a quarter where you see investment banking as a much bigger driver, and that actually helped drive results in that segment higher, even with a soft fixed income backdrop. So if we get some volatility, that could be good. My comment is we have to be careful what we wish for, because kind of a low volatility, benign backdrop that we've been in over the past year has actually been good for businesses like investment banking, good for wealth management, good for some of those other capital markets businesses. So I do think it's mixed.